Everybody, to Jackson Hewitt's Tax Talk Live series. And today's topic, in our continuation of helping you out, how to get the biggest refund that you can. Now, we've been taking questions on our Facebook channel for some days, so I have some, but as you like, please feel free to text them in or write them in today, and we'll answer them as we go along. I'm going to be short today. We're only going to be here for 20 minutes or so, and I've got a few very important tips on what you personally can do to get a bigger tax refund. And after 35 years in the tax business and as Jackson Hewitt's Chief Tax Information Officer, you can trust me when I say these are well-founded tax tips that will work for you. The first thing that we keep asking is, what are refunds going to look like this year? And that's a complicated question because each and every person's situation is different. But I can tell you without a question, with all of the tax law changes for 2021, life changes, government programs that helped respond to the pandemic, tax refunds, even in the face of advanced child tax credit payments, which we'll get to in a moment, should be as big as last year, if not bigger. And one of the questions we get is, why would that be? Well, there were many new programs put into place that range from the child tax credit, which is much, much bigger than years past, up to $3,800 per person. There's a dependent care credit. If you have dependents and you put them in daycare or summer camp so you can work, $4,000 or $8,000 per person in tax credits. The earned income credit, well over $6,000 if you got 3 or more children is big. New this year, bigger tax credit for earned income for single people with no children. And the list goes on and on, from self-employment benefits, the home office, to a lot of different things. So refunds should be bigger. Our early data is certainly showing that, but it doesn't just happen automatically. You'll need to take some action. In part and parcel of that, we get the question of, when do documents come out so I can file my taxes? Documents are coming out right now. As every year, W-2s, 1099s, those types of documents have to be issued before January 31st. So if you haven't seen them, you'll certainly see them coming soon. An important point for your viewers today, since you're taking seriously your income taxes, are new documents. There'll be new documents this year. There'll be documents related to the child tax credit advance payments, and about 35 million people will get those. They'll have a great deal of information that will help your tax return both be more accurate, process easier, and probably get the other half of the tax credit that you haven't gotten yet, because it was only one half that was advanced paid. There'll be a document related to economic impact payment number 3, or stimulus payment number 3, or recovery rebate credit number 3. Call it what you will. It may seem like years ago, but last March 2021, 160 million Americans or so received a $1,400 stimulus payment. Well, if you're due more money for a lot of different reasons, a new child in 2021, adopted a child in 2021, foster care, shared custody, and that was your year, you may be due another $1,400 that was not paid to you automatically. So you'll need to take that recovery rebate credit paper, if you don't remember how much money you received, reconcile that with your tax pro to how much money you are due. And as I say, you could be due more money, and get that on this year's tax return. A quick point on that, we get this question a lot: are stimulus payments taxable? And I'll jump ahead in the question session and say, no, stimulus payments are not taxable, but you do need to put them on your tax return, especially if you're due more money. Child tax credits equally, you have to put them on your tax return to get the other half, but it's not taxable, it's a tax credit. Report it wrong as income, you'll pay too much. So lots of documents to watch out for, a lot of things to keep track of, and a lot of good reasons to do that. Another question we get is, with so much documentation coming, how's a good way to get organized? And I tell people each and every year, but 2021 is probably more important because so many more documents are flowing, that it's really simple. You take the shoebox method, that works. The manila envelope works. Just keep track of those documents. And it's important to note, when you see those, they'll have important tax document on the envelope that it comes in. Not something to be skittish about, not something to be scared about. If it says important tax document, trust me, it's an important tax document, and you need to save it with all of your tax documents, whatever those may be. One question we get is, suppose I didn't get one, what do I do then? Well, that's a facts and circumstances kind of a situation. If you're waiting on a W-2 and you haven't gotten it pretty soon after January 31st, you'll need to take action. You'll need to reach out to that employer. Maybe you moved, maybe they have a bad address, maybe they went out of business. In any case, just because you didn't get a document, be it a W-2, a 1099 for earnings of dividends or interest, cryptocurrency transactions, what have you. If you didn't get a document, that doesn't mean you don't pay taxes on it. That just means it's going to be a little bit more of a step that you need to take to get the accurate information. So reach out, get those documents, start to get organized. What other types of documents are helpful? I get that question often. Well, anything related to your tax return, you'll need to have information on, especially on deductions and credits and dependents. And it's always a good idea to find last year's tax return. That's just a real helpful jump starter for your tax pro to know what to look for and what to watch for. So again, the shoebox works, the manila envelope works. If you get more aggressive and you want to break it down, I tell people you can break it into 4 categories to help yourself and help your pro: income items, deductions and credit items, life changes items, and we'll get to those in a moment, and other. If you get a document and you're not sure what to do with it, just put it in other and let your tax pros sort it out. So getting organized, as simple or as complicated as you want to be, critically important this year because all those new documents are going to come. And more importantly than ever, they can attach themselves to real tax benefits. $3,800 child credit, $6,000 earned income credit, $4,000 dependent care credit, $8,000 if you have 2 children. And we won't even get into education credits on this because nobody's really asked about that. So a lot of things to watch, a lot of things to watch out for. And it's more important than ever than you pay attention to your taxes. Some questions we're watching here. How can I get a faster tax refund? What do I need to do? Well, tax refunds, despite the difficulties that we had last year with millions of Americans getting hung up, are really scheduled to be the same this year. 9 out of 10 taxpayers should get their tax refund in about 21 days. But that depends on a few things, and we'll talk about it this way. Your tax return needs to be accurate. Your information needs to match what's on the tax return and the IRS systems. If it doesn't match, it'll go down a path where the IRS tries to figure out what's wrong, and that can lend weeks or months to the timing on which you get your refund. So the first way to speed a refund along is make sure your documents and your information on your tax return match IRS systems. What that means is no guesstimates, no estimates. Don't think about it that I might have got. Watch for the IRS documents, or find out by looking at your bank account activity. Or new this year, you can set up a ID Me account at IRS and find out your information real time. So you can go to the IRS and in a pretty few short steps, set up an online account to pull down information if you've moved, or if you just want more accurate information, or if your letter got lost or eaten by your dog. So consider an ID Me account. Any good tax pro can help you with that. So make sure your information matches. That's step 1. 2, file early. I always tell people who want to wait till April 15th, and we'll talk about the date this year being April 18th, but you can file your taxes as soon as you have all of your information. And the earlier you file, the faster you get your money. It's that simple. But also, the earlier you file, the more likely you'll be able to lock your information up with the IRS. And then those bad schemers who might have stole your data through some data breach or some data theft or on the dark web, they can't file a fast tax return and get another refund. You file early, you get your money early. You file early and your information's locked up. But equally important, as we just talked about, all the tax changes, if you file early and your tax pro says, hey, you might have a home office deduction, or you might have some new deduction or credit, you need more information, you won't be up against the midnight hour. So filing early and filing accurately is the easiest way to get a faster refund. It's just that simple. Here's a question from someone that says, are we getting another stimulus check this year? Well, there's not another one scheduled currently, but our elected officials are in office right now, and they're discussing a host of legislative changes, the child tax credit, another stimulus payment, and other things. So right now, there's not another stimulus payment, just the 3, but there may be more stimulus related to the first one, the second one, or the third one if you didn't get all of your money. As I mentioned, the third stimulus was $1,400 per person. That was on your tax return for 2020 that the IRS paid based on that information in 2021. If anything changed in your life, a new dependent child, for all the reasons that I mentioned, you may be due more money. And unlike the original stimulus payments, it will not happen automatically. You'll need to add that to your 2021 tax return and ask for an additional $1,400 in stimulus credit. It's just that simple. So if anything's changed on your return, be sure to mention that to your tax pro. Another question, why are we getting denied child tax credit? Well, the child tax credit has been changed quite a bit in 2021, and there's a lot of reasons for that. The most common reason that you might be denied is somebody else has already claimed in advance. And that's why I emphasize filing early is critically important because there's a lot of bad people out there, and that's in just normal situations. If you've got a contested custody situation, that's another area that can lead to trouble. So you need to have your documents and your books and records in order, and you need to file as soon as you can. It's just a smart one. Another question that we get from time to time is, what do I need to do to file the most accurate tax return? Well, there's a lot of ways to an accurate tax return. I'll give you the simple model. Really simply, it's three things. One, you have to be actively involved in your tax return. It's your single largest financial transaction, and only you know what happened to you during the year. Did you start a side business? Did you trade in virtual currency? Did you or a family member go back and have some higher education classes that might qualify for education credits, especially all the items that are first year? Only you generally know about that. The second thing that you have to have is tax knowledge. Now, you can do that by reading about it, and there's a lot of resources. There's resources on the Jackson Hewitt website. There's lots of information out there on the internet on all sorts of tax issues, but you have to be versatile, and you have to know about them, and you have to invest the time. Or you hire a tax professional that has been trained, that has had some experience, that does have current technology and knows about all these items, and you can use their expertise rather than learning it yourself. But there is no substitute for tax expertise. It doesn't happen with software. A lot of people think that if I've got good software, I'll get all my money, but that's only part of it. But that is the third part. You have to be involved. Somebody has to have tax knowledge and tax expertise, but the third part is technology. You can no longer look past technology as an important part of the tax process situation. It's easier to catch things. It's easier to capitalize on new tax law changes if you use current technology. So the days of the old papers around the kitchen table that myself and saw my parents do, that day is largely gone. You really need to engage technology, and it can be done a lot of different ways, not just on tax return preparation. It can be used for your document organization. You can set up an online account. We have it at Jackson Hewitt to store electronically your documents throughout the year, and so you can put the shoebox as a backup. But tax return technology is critical, along with tax knowledge, along with your involvement. And if you do all three of those things, you'll have an accurate tax return, probably the biggest refund that you can get, and likely a faster refund, quite candidly. So all three of those working in tandem are how you get the biggest refund that you can. Let's see. This one says, another question. My ex claimed the kids last year. How will that affect my child tax credit? Well, dependents are one of the most complicated areas within the tax code. And in the simplest situation, whoever the custodial parent is that's related, that provided more than half the support that the dependent lived with, qualifies for the dependent. And as we've talked about, they not only qualify for the dependent, all the tax benefits that attach to the dependent, the least of which is the child tax credit, the dependent care credit, and a bigger earned income credit. So dependents are critically important to a big tax return refund and lower tax liability. But who gets them? That's not always as simple, especially in separated situations, which millions of Americans have. So it's important that you have good documentation, especially in a contested situation. It's also, as I said, important that you file early so that in the fact that you have a contested situation, somebody else doesn't try to do the end run around. Equally complicated that people have to deal with are very, very happily shared custody situations where the dependent flips from year to year under the custodial agreement. That can create havoc on a tax return. So one of the questions that we have is, my husband, or my ex, I assume, my ex claimed the child last year and is getting the child tax credit. It's my turn this year. What happens? Well, that's one of those bad scenarios whereby the IRS thinks spouse number one, who claimed the dependent in 2020, gets the advanced child credit. They've probably prepaid a good deal of that money, and provided that other person did not opt out, they may very well have to pay that money back, especially if it's not their year for the dependent. Now, good news for the other spouse, if it's their year, they probably did not enjoy the advanced child credit payments, which probably would have helped, but they will get the full amount of the credit on their tax return this year. And I won't go into too much detail to talk about all the nuances of the child credit, but it can be up to $3,600 or even $3,000 for an older dependent, and up to $2,000 if all else fails on the age and the income phase outs. So there's a lot of money attached to the dependent. And it's critically important that the proper parent, the custodial parent, the parent who deserves the credit, gets that credit. What else do I need to know about this year that can help me? Well, we're running up against a little bit of time here, so I'm going to cut to the chase on this one. There's a new rule, not too new, but it's new for most of us who've been in the business for 30 years, about charitable donations. Now, for decades, to take a charitable donation on your tax return, you had to do what was known as itemize your deductions. And you may have heard of this. When you itemize, you add up all your tax deductible expenses, home mortgage interest, property taxes, income taxes, sales taxes, charitable donations, medical in some cases, and others. And to the extent that's larger than the standard deduction, which all taxpayers qualify for, it's about $12,000 if you're single, $18,000 if you're a head of household, $24,000, $25,000 if you're married. If you have a standard deduction that's bigger than the itemized when you add up, you take the standard. If you have itemized deductions, you take the larger of the itemized. And that's when you would take the charitable donation. Well, new this year, and if you listen to nothing else I say today, know that you now get a charitable donation deduction, even if you take the standard deduction. You get both the standard deduction, and to the extent you had qualified charitable donations to your church, synagogue, or mosque, and you have documentation, you can get up to a $300 deduction if you're single, and up to $600 if you're married filing joint. So you get a brand new deduction, which most Americans are quite generous, especially with the past holiday season. And you get to take that on your tax return in addition to the standard deduction. So great question about the charitable donation. So long story short, watch for the charitable donation. What other credits do I need to watch out for? As I mentioned, the child tax credit is the big one to watch for this year. The dependent care credit, equally important if you had kids in daycare or in summer camp. The dependent care credit cannot be overlooked at $8,000 per 2 children, $4,000 for one. Earned income credit, well over $6,000. Another credit related to the question, education credits. The education credits that are available for higher education costs, think college, after high school, those are enormous, and millions of taxpayers qualify for them, but millions more overlook those. In fact, all of these credits are overlooked often. The earned income credit, 1 out of 5 failed to take that every year. And as I said at the start, one of the important parts of the tax return process is that you be involved, because if you leave something off, it's a very common myth that the IRS will catch it and they'll add it back. Nothing could be farther from the truth. So the second thing to take away from today's session is you need to be responsible and you're pro for what's on your tax return. If you leave off a credit, if you leave off a deduction, if you leave off a benefit, that will not be caught by the IRS or a state and you get a bigger check later. That might work with your credit card company for a credit or some other return allowance if you've taken a product back, but it will not happen on your taxes. You put it on there and you get the benefit. And that's what's going to gauge the larger credit or the larger tax refunds this year. This $3,600 child tax credit, $3,000 for the older children, $2,000 at a minimum if you have dependents that qualify, up to $8,000 in dependent care credit, $4,000 if you've got one child. The earned income credit, well over $6,000. Education credits, which start out at about $2,000. There's just many credits that are available, and a lot more people are paying attention to their tax returns this year, because they recognize these larger credits might mean larger refunds. But as we started, and I'm going to kind of start to wrap up on this, you have to be involved. You have to keep track of all your documents, and you have to watch out for what might be overlooked, when you're doing your taxes, and even talking with your pro. The best pro, even me, if I don't know what's going on in your life, I won't know to put that down there. So you need to pay attention. You need to keep track of your documents, and you need to file early, and then you'll get the biggest tax refund that you can, and probably as large as last year or even bigger than last year. So pay attention to all of these points, and tune in the future for more of our Tax Talk Live series, where we'll cover other elements that you need to know to get the bigger tax refund that you can. And it's your money anyway. And we'll talk about it on a future session. What is a tax refund? It's not money from the government. It's your money that you are due because the tax law says so, or that you had withholding, or you did whatever it is that drives the tax benefit. But it's your money that you're getting back. And the more you get back, the better off you are. The earlier you get it back, double bubble, bigger and earlier. And the way to do that is pay attention to your taxes, your largest single financial transaction each and every year. Get engaged with the items that you see on the news or on our website or on our web channel or on these types of videos. talk to your tax pro, and you'll simply get more money. I've seen it time and time again. Many deductions are overlooked, many credits are overlooked, and they just go unclaimed forever with no backstop to help. So it's up to you. It's up to you to pay attention. It's up to you to engage a great tax pro, and it's up to you to get your taxes done correctly. So pay attention. Come see us at Jackson Hewitt. Tune in for future Tax Talk Live series and get more of your money and more money and earlier money. All the best of the tax system in the United States. It is really a wonderful system if you participate in it, and I have for 35 years, and I encourage you to do so. So from all of us at Jackson Hewitt, thanks for your time today. It's been wonderful talking with you, and I look forward to seeing you on a future Tax Talk Live.